Is Adobe the next Evolution AB? Will the stock continue to go down? This is the topic of today's video. This is the stock price of Adobe, and this was the stock price of Evolution AB when I bought. I bought here Evolution AB in late 2023. And since then, the stock has gone down and down and down and down and down. So in this video, I want to compare the two companies because we have a similar profile. You have two businesses that are growing. I will show you the fundamentals of these two businesses. Growing profitably, the moat is under attack, the business is under attack. You have plenty of new risks that are coming and the stocks have dropped. So in this video, I want to compare the two companies. I want to compare the fundamentals, the quantitative analysis, but also the qualitative analysis, because you have some clear similar points, but you have also some clear differences. Okay. Full disclosure, I was a shareholder of Evolution between 2023 and 2025, and I sold in April of 2025, something like this. And I bought Adobe very recently, like in past couple of days, past couple of weeks. Okay, so of course I will be biased in this video, but I'm just sharing my thoughts, and I think it will be pretty helpful to a lot of you guys, because you want to avoid the traps that we have seen for Evolution AB. When I first bought Evolution AB, it was a promising investment and the stock had gone down, so the valuation became reasonable, cheap, and then things got worse. The fundamentals got worse. So in this video, I want to compare the two companies to see if Adobe is the next Evolution AB, or is this really something different? Okay, I think we can start. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And my sweet spot of buying opportunities are when a quality company that is growing profitably is hated. So it was the case for Evolution. The stock price of Evolution had gone up and up and up and up, and then for some reasons gone down, 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 but still the business was growing nicely and profitably. And then we saw some early signs that the problems were not temporary. The problems were permanent, and the management team didn't react. So the business got worse and worse and worse. And now for Adobe, we have the same pattern. The stock has a good track record, but the stock has done nothing for the past 5 years. So the stock is getting hated. The management team is getting some hate right now. People are doubting the business model. People are talking about the risks and the risks and the risk of Adobe that is getting disrupted right now. So in this video, I want to compare a few things, and I have some notes for you. Okay, first of all, the two companies are profitable and growing. You can look at Adobe, profitable, as you can see here with the net income, only profitable, and growing. This is your revenue over time. They generate more free cash flow up and to the right every year, and they don't have a debt problem. For Evolution AB, we are talking about a company that is growing a lot. Look at the revenue up and to the right. Net income positive and growing, no debt problem. For those who don't follow Evolution AB, this is the largest company in the gambling industry. Okay, so they are by far the largest player, and they've been keeping their leadership for many, many, many years. Okay, so they create games for online casinos. This is it. This is a simple business model. They are available everywhere in the world, or almost everywhere in the world, and yeah, pretty good. Second thing that is common to both these companies is a very high ROIC, and they are doing buybacks. So Adobe has ramped up the buybacks very recently. For Evolution AB, the ROIC is pretty high, 30% ROIC, and they ramped up buybacks. They started a buyback program in 2024, and in 2024, 2025, they did buybacks. So similar situation. But they have the same problems at the same time. First of all, you have worries that growth is decelerating, and the growth rate of Adobe has dropped. the growth rate of Evolution AB has dropped for several reasons. For Evolution AB, for example, you have new rules for the gambling industry. You have regulation right now. And because markets are getting regulated in Europe and it's starting in Asia, the revenue growth is not the same. Now we are getting larger. Evolution has become too big as Evolution is becoming regulated right now. So the growth rate is locked right now and the margins are getting lower. For Adobe, we have the same thing. Maybe the growth is not the same as before. And I want to monitor one thing that will make or break the thesis. I will show you one chart that I have never seen. Maybe this is the first time I see this video comparing the two companies. And I want to show you this chart with two lines. In orange, you have the revenue growth rate for Evolution AB. In blue, you have the revenue growth rate for Adobe. So I can show you, first of all, Evolution AB. This is for Evolution AB. The color has changed, but this is for Evolution, okay? We are talking about a business that has historically grown at 60% per year, 50% per year, 30% per year, and the growth rate decelerated, okay? And now I can show you for Adobe, a business known for growing 20% per year, and now we are stuck at 10% per year. Same thing, you have deceleration. The thing I want to check in the future for Adobe is this. When the plateau is breaking, when the support is breaking. As you can see here, the revenue growth rate for Evolution AB has fluctuated a lot. It has decelerated from 50-60% growth rate to 20% per year, and then 15% per year. And then everything fell apart in 2025, and the growth rate became single digits. And actually, if you look at the latest data, sometimes it's even worse than this. So the business is no longer growing. You have some segments that are declining, profits that are declining, cash flows that are declining right now. You have a big difference between a deceleration story and a declining story, because this will affect the valuation a lot, the PE ratio a lot. When I bought Evolution AB, it was known to be a growth story. They were having temporary issues, but if they fix their issue, this is fine. And Evolution AB has just accumulated more and more problems. So it went from a growth story, a growth play, to a value play, to now a turnaround play. Value because the growth just decelerated, and now a turnaround play because the company is not growing anymore. The growth disappeared. I want to see the same thing happening for Adobe. I want to monitor the growth rate. And what can you see for the growth rate of Adobe in blue? The growth rate decelerated from 20% per year to 10% per year. But it seems like since 2022, for 3 years, 4 years, the business did not move much. The growth rate did not move much. We are less volatile compared to Evolution AB. And it seems like we have found a new way of growing. Only 10% per year, but pretty stable growth rate. What I will monitor for 2026 with deep attention is this, the blue line. What is the growth rate for revenue? Are you stable at around 10% per year? Or are you doing less than this? Or more than this? Now the management has guided for roughly 9 or 10% growth rate. So the guidance from the management team is about 10%. And I checked the track record of the guidance for the management team for the past 10 years. They are known to be a little bit conservative. So when they say they will grow 10%, yes, they will grow 10%. And the guidance is not including the SEMrush acquisition. So my guess is they will do a little bit more than 10% per year. Okay, good point. So you clicked on this video. Is Adobe the next Evolution AB? Well, if you look at the first point, the revenue growth rate, so far, no. Adobe is not the next Evolution AB. Okay, this is the first point of just comparing the two companies.
By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video.
The second thing I want to share with you today is the compilation of temporary problems and how the management team is reacting. So, let me list a couple of problems Evolution AB has and has had for a couple of years now. First of all, Evolution AB is decelerating. The management team, it's a temporary problem. We will get back to growth soon. Second of all, they said they would just prioritize growth instead of margins. And now it seems like the growth is going down and they want to prioritize margins again. So a change in tone. Third thing, we had some problems with the employees. In Georgia, they had some strikes, some operations that were shut down, and the management team took some long time to address this issue. Another problem is regulation. Regulation in Europe, regulation in Asia. So it's supposed to be temporary, but if you have new massive rules in Europe, maybe the growth rate will never be like it was in the past, growing 30, 40, 50% per year. Because Europe is getting regulated. And in Asia, you see some regulation now. In the Philippines or India, it's starting. Okay? So maybe the way Evolution has grown in the past is no longer possible because of more regulation. Similarly to margins, Evolution will be less profitable in the future. Another temporary problem, you have cyber attacks. Obviously in Asia, this is a temporary problem. People are stealing your content. How is the management reacting? It's been quarters and quarters and quarters. The management is not doing anything. So, Evolution AB's management team is playing defense. They have many problems happening at the same time, and the way they react is a little bit slow, which means for regulation, they comply. It's good for their long-term reputation, right? They comply, but they don't provide solutions to grow again. They just say, okay, we have new rules, new regulation. Let's just bow. Let's just increase the regulation and be fine with it. Second thing, Asia cybercrime. Zero response from the management team. If you look at the latest earnings call, they just said, yes, we have problems. So we'll play around with how much do you want to grow again in Asia. If we fight too much against this, our growth rate is 0. And if we let them steal our content, it's bad for our brand. So what is the worst situation out of growing and being stolen or not growing at all and declining? They don't have a clear plan to just protect themselves, protect their games, protect their players against the cybercrime. What I want to say is you have plenty of temporary problems and the management was a little bit slow to address these issues, which means they take a little bit more time to react, more time than expected. And investors, including myself at the time, did not like this. How long are you willing to wait so that the management can officially become aggressive again? And problems just keep piling up and they continue to worsen the situation. And as I just showed you, the revenue is just declining and declining. The revenue growth rate is declining. And now the revenue is flat. The revenue is no longer growing. The earnings are no longer growing. The cash flows are no longer growing. So maybe the management was a little bit too slow. Maybe you have some inside information and something we are not aware of. But yeah, a little bit sad to see this, actually, because the quality of the business is extremely good for the long term. Now I want to compare this with Adobe. Adobe has several issues. You have more competitors that are stealing some market share, Canvas, Figma, etc. You can generate videos, images on LLMs right now. You have some disruption with AI. and a lack of monetization when it comes to AI. And they have created their Firefly tool in 2023, ramped up the Firefly ecosystem in 2024, and it seems like for the second part of 2025, they started to monetize AI. So it took them 2.5 years to finally monetize AI, to finally become aggressive. And this is the major reason why I did not buy Adobe before, because I just saw the management team do nothing. You had more players, more AI disruption, and no monetization, no aggressiveness, no fight back when it comes to the management team. And for the latest part of, for the second half of 2025, the management team is finally fighting back. And this is why I pulled the trigger on Adobe only recently, at the end of 2025. Because now Adobe is creating more and more AI tools. They just increased the pace of innovation. They're integrating AI everywhere. You can track all the mentions of AI in earnings calls. It's very similar to Google in 2023. So they are really pushing. I checked all the interviews from the management team. By the way, talking about the management team and the way they react, I have watched plenty of interviews from the CEO of Adobe. And strangely enough, you don't have many interviews from the CEO of Evolution AB. Why is that? I will let you do some research. You do some research on Martin. You will see. You have plenty of interviews from Todd, the person who is creating the games. Okay? But you don't have many interviews from the CEO. Does it tell you something about the management team? Does it tell you something about the culture of being private because it's a Swedish company? Maybe. But you have much more information when the CEO is speaking compared to somebody else. And I have watched maybe all the interviews from the CEO. And for the past 1 year, 2 years, the questions are the same from interviewers. AI, how do you compete against free tools like Canvas, etc., etc., etc. So they know their problems. And for the past 2 years, they just did nothing. They created new AI tools, but it didn't generate a lot of revenue. Now it seems like it's starting. We will see in 2026 how they operate, but my strong guess is they will continue aggressively to integrate AI everywhere and monetize AI. We recently learned about a new monetization system with credits, AI and credits, a pure royalties, pure profit play actually. So yeah, pretty good to see this happening. The management is clearly reaccelerating when it comes to AI and defending themselves. Strangely enough, it is not reaccelerating the revenue. Maybe a bad sign. If Adobe struggles in 2026 and the revenue decelerates, it will be extremely bad, but we will see. So yeah, management team, they know their problems and now it seems like they're fighting back. Talking about management team and capital allocation decisions, what I don't like about Evolution AB is they are passive and playing defense. We are being attacked in Asia. It's okay. We are having more regulation in Europe and the growth rate goes to zero. It's okay. We will comply. We will just enjoy a lower growth rate. For Adobe, it seems like they're getting more aggressive. They wanted to acquire Figma a couple of years ago. They have a long track record of making big acquisitions that created a lot of problems, by the way, if you want to do some research. So they want to make some acquisitions. They recently did the acquisition of SEMrush. They are implementing AI everywhere. They are starting to do some partnerships with everybody, all the LLMs, Adobe and ChatGPT, Adobe and YouTube, Adobe and Gemini, Adobe and everywhere. You can integrate Adobe a little bit everywhere. They have the distribution, they have the ecosystem. And at the same time, the two companies, Evolution and Adobe, are doing buybacks. I told you at the beginning of the video, Adobe has started a buyback program. Here. In 2024, they did some buybacks. In 2025, they did some buybacks. So they repurchased what? 4% of their shares every year. At the same time, you have a dividend yield of 4 or 5%. Okay? Adobe is doing the same thing. They are doing more and more buybacks. They don't like dividends, which I love to see. They've only focused on buybacks. So both companies think that they are cheap. Both companies have a similar situation, being hated, some problems, temporary problems, and both companies are allocating the majority of their cash towards buybacks. Adobe is playing aggressive and offense, and at the same time they are doing buybacks. So Adobe is tackling their issues, while Evolution is not tackling their issues. They are just complying and enjoying the threats, enjoying the deceleration, and not providing any plans whatsoever to grow again. What a wonderful red flag, right? Because I've been monitoring Evolution AB for years now. I'm following all the earnings reports. I'm checking all the earnings calls. And for the latest earnings call, analysts were doubtful. Can you grow again? Can you explain in more details the strategies you will have to grow again? The management team did not say one word. He basically said, we'll let you know later, but we are happy with the results. Happy with the results? You grow 2%. you grow 2, 3, 4%. You should not be happy with the results. And this is a kind of language I don't like to see. Even for a Swedish company. So Swedish, European, conservative company. No. For Adobe, you have a concrete plan that they are executing right now to monetize AI and put AI everywhere. Literally, plenty of interviews from the CEO explaining their plan. Step 1, step 2, step 3, step 4. This is what we will do. This is what we will do. Do. We have many issues. This is the issue number 1. So we'll do this. Problem number 1, solution number 1. Problem number 2, solution number 2. And I love this. This is great. Additionally, in terms of capital allocation and culture, Evolution stock is down. So I want to see all the cash allocated to buybacks. But because this is a Swedish company, they love dividends. And now they have a dividend yield of 5%. And I hate to see this because, if you are from Sweden, you don't have to pay taxes on dividends. But most people in the world will have to pay taxes on dividends. So I would rather they completely cut the dividend and allocate all their cash to do buybacks. They are not doing this, and they will not do this because they are Swedish. This is part of their culture and their system. For Adobe, you don't have any dividends. They just do buybacks. And now they're allocating 100% of their free cash flow to do buybacks. Literally, what we wanted to see for Evolution AB, Adobe is doing it, putting all the cash to do buybacks because they think they are cheap. So what will I monitor for 2026? First of all, will I buy Evolution again? As long as all the problems are here and the management team is not being aggressive enough, I will not buy Evolution AB. I'm happy to switch. What will I monitor for Adobe? The growth rate will be extremely important. If the revenue growth rate goes back down, it will be a major red flag. Maybe the growth rate will stay at 10% per year, and this is fine. Maybe the growth rate will reaccelerate because of AI monetization ramping up. Maybe it's possible. And I can see a scenario where it's happening. Second thing, you want to check if they continue to be aggressive to tackle their problems. I want to continue to see Adobe implementing AI everywhere. Now they say 1/3 of the business is AI-led, AI-driven. I want to see the business being 30% AI to 40, 50, 60% AI. The majority of the business will be AI in the future. So I want to see more efficiencies, more implementations of AI everywhere. Okay? By the way, maybe AI will help Evolution in the future. Because, you can already check this. What is the management saying about AI? Nothing, because the tone of the management is different. They were asked many times, how will you implement AI? They say, yeah, maybe lower cost. This is it. End of the story. But maybe AI will help Evolution AB. The management team is not sharing a lot of information about it, but I believe you can make games, create games on a more efficient way with lower costs, minimal headcount. So actually AI will help both businesses, but out of the two, Adobe is mentioning AI more. It's American, it's pro-growth, and they have direct applications of AI. For Evolution AB, maybe it will take more time. Now they have bigger problems to deal with. Okay. By the way, what is the valuation for both this company? Let me check a normal PE ratio. Okay. This is the PE ratio for both companies. In blue, you have the PE ratio of Adobe. In the past, it was like a 30, 40, 50, and now it's 20. And in orange, you have the PE ratio for Evolution AB. It was 40, 20, 70, and then it has dropped to 30, 20, and now 10. So I don't think Adobe is the next Evolution AB. They are more aggressive. They are tackling their problems faster, and they are allocating all of their cash flows to do buybacks, which I love to see as a shareholder.
If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.